Welcome back to part two, discussing term life insurance with Larry Keller from Physician Financial Services. Okay, Larry, what are the most common gaps or misconceptions that you see most physicians have regarding term life insurance?
Probably the biggest misconception is that they think that they don't need it. Like I kind of view it this way. If you're married and you love your spouse and your spouse relies on your income, you need it. You'll laugh when I say this, but if you're married and you hate your spouse, but you have kids and you love them, you need it. And then probably the biggest misconception, like we said in the last one, is even if you're single, but you plan on buying into a surgical center or you plan on buying into a practice or you've got a family history that might not yet have impacted you, you should consider it at that point in time when you're still young and healthy.
Larry, let's break down because I think all of these are really important points for everyone out there, and I hope they're taking notes. This isn't just for, quite frankly, physicians, it's for anyone really thinking about term life insurance. Can you drill down through the basics for us?
Yeah, so term life insurance is death benefit only. I buy a policy, I name a beneficiary or beneficiaries. In the event of my death, that beneficiary or beneficiaries are going to receive money. It's really nothing more than income replacement for those that are depending upon your income. Much like disability insurance is income replacement for you in the event you can no longer work as an orthopedic surgeon and you're relying on your income. Then we look at, okay, how do we determine coverage amount? This might vary from individual to individual, but a good rule of thumb is 7 to 10 times your gross income. And what's going to impact that is replacement of your income, paying off debts. This might actually include student loans that were signed off for or co-signed, education for your children, both college or potentially graduate school, paying off your mortgage, any kind of future financial goals that you might have. Do you want to go out and buy a rental property? Then we're going to look at the length of a term. How long do you want your coverage to last? Well, if you're buying a policy solely to pay off a loan, you don't plan on refinancing it, and the loan term is 10 years, you'd probably want to buy a 10-year term specific to cover that purpose. But if you've got children, you could go out and you're likely going to be looking at a term for 20 years, 25 years, 30 years. Some companies offer a 35 or even a 40-year term. Now, that is very long. You might only be looking at that if you plan on having a substantial number of children, or you're young and you plan on having children when you are young, and you're still going to be young when you have this requirement of income for the kids. Then we're going to look at riders or optional pieces that you can add to a policy. So one of them may or may not be a rider. This is what's called a conversion option. And this allows you to switch or convert from a term life insurance policy to another type of life insurance policy that we call permanent insurance. And this comes in very different forms. This could be what's known as whole life insurance or universal life insurance, equity indexed universal life insurance, variable life insurance. And it really just allows you to lock in the fact that you were healthy when you bought it. And even if you're no longer healthy today, you're guaranteed to be able to switch at that same health category. Do I go out and tell people, yes, you should plan on switching to a cash value policy? No, that's generally not my goal. But should you have a convertibility feature in your policy? Yes, it should allow you to do this because it will provide flexibility in the event you need it. There are some policies out there, Marnie, that have no conversion option. They're a little bit less expensive, but they basically, in my opinion, back you into a corner and provide you with no options if your health changes. I do not recommend that to be your sole policy. If you have some coverage that's convertible and now you're looking to add, maybe you would consider a non-convertible policy for that additional coverage. There's something called a waiver of premium rider. Again, generally, I'm not a fan of this. This essentially pays the premium of your life insurance policy if you are disabled. Unfortunately, the definition is much more restrictive compared to an individual disability insurance policy. And if you've got adequate disability insurance, my opinion is that should be enough. You can continue to pay your term life insurance premium and you'll be in good shape. You will find something called an accelerated death benefit rider. This is a no-cost option that allows you to tap into the death benefit in advance, typically if you're diagnosed with 12 months or less to live. And there's going to be an administrative charge. There's going to be a discount factor depending upon how early the insurance company gave you the money. But keep in mind, anything that you access comes off of the death benefit that you're ultimately leaving to your family. There is another type of life insurance that's available with other riders. They're typically built into the policy, so you're not paying for the riders themselves, but this is what's known as living benefits. And this will also have a terminal illness rider, but instead of a 12-month trigger, it's really going to be like a 24-month trigger. This is where you're told by your physician you have 24 months or less to live in their best medical opinion. You might find a chronic illness rider where you can access the death benefit or a portion of it if you need help with two or more of the activities of daily living, right? Bathing, eating, dressing, toileting, maintaining continence, transferring from bed to chair. Or you can even access it for critical illness. So if you're diagnosed with invasive cancer, or God forbid, you had a stroke or a coronary artery bypass. So you might decide, do I explore term life insurance with living benefits? Or do I forget about the living benefits and I just go straight with term life insurance and that's it? So those are really the things that we're going to be looking for when it comes to what am I actually looking to buy? What should I speak with my financial professional or insurance agent about?
Love that. That's so much information. So let's do this because I think surgeons like a plan. They like step-by-step things. I'm a surgeon or anyone out there. I've listened to this. I want to call someone, maybe you, maybe someone that, one of their peers works with, but I want to call someone. What do they need to prepare in advance so that they can come to that conversation with the insurance broker prepared so that the insurance broker really can properly recommend what, how much, the terms, etc.
Yeah, so this is actually really easy. So you're going to know this and you're probably not going to have to look anything up. So we want to know your date of birth. We want to know your height and weight. If you've lost a significant amount of weight in a short period of time, let's say you're on a GLP-1, any amount that you've lost within 12 months of applying for insurance, we're going to add back 50% of what you lost. So that's going to factor in. We're going to ask about smoking. So if you're using cigarettes, maybe you quit 2 years ago, we're going to want to know the last time that you actually used cigarettes. If you're using something like Nicorette or you do chew tobacco, different companies are going to be better for that than others. We're going to want to know if you do hazardous activities. Do you private pilot? Do you fly a plane? Some companies are going to say, Marty, if you fly a plane, we're going to give you two choices. You can have coverage in the event of your death as a result of a flying accident, or we might allow you to exclude coverage for flying and we'll charge you less. I could think of one client, he wasn't quite sure what to do. He actually bought one policy that covered his flying activities and another one that specifically excluded his flying activities. We're going to want to know, are you a visa holder or are you a U.S. citizen, a permanent resident? Are you in the military? Some companies are going to insure you just like anybody else if you're on the base doing your duties as an orthopedic surgeon. Other companies are going to limit the amount of coverage that they offer, or they're not going to offer coverage at all. We're going to want to know about your family history, just mother, father, brother, sister. Do you have a family history of cardiac disorders like a heart attack or coronary artery bypass or coronary artery disease? Do you have a family history of cancer? Some companies are going to use a death criteria. Oh, well, if both your parents are alive, we don't really care about that. We're not going to hold that against you. Other ones are going to say, well, no, if there was a diagnosis, even if they're alive, we're not generally going to let you get the best underwriting classification. Are you taking any prescription medications? Some companies, if you have something like ADD, ADHD, and you're using Adderall or Vyvanse, they're not going to allow you to qualify for the best category, the lowest premium rates. Other companies are going to say, we don't care about ADD, ADHD. So, like anything else, you really want to work with a specialist. I'm always leery of the person that says, I can manage your money, I can do your insurance, I create your financial plan, I can do it all. To me, that signals you're a jack of all trades and you are a master of none. Off mic, you and I had a discussion, and I said I limit my practice to insurance. And the reason that I do that is I know I'm going into every meeting prepared, much like a surgeon with a surgical plan. I've done it before. I know what is concerning to surgeons. If they don't know what's concerning, I know what they should consider being concerned about and why. Term insurance is about as easy as it gets. Unfortunately, at the end of the day, like a lot of things, it just becomes a commodity. But unlike orthopedic surgery, where I could say you need a hip replacement, I happen to do a fellowship in hip replacement, I can charge you almost anything I want. And you're going to be happily paying that rate if you feel I can deliver the best result for you. Here, we're heavily regulated, both for disability insurance, life insurance, and agents that have access to the same products. If we illustrate things the same way and the policies are structured the same way, guess what? The cost is going to be exactly the same. So I might be a little jaded, and I say, if you can get the person that created the procedure and they teach other surgeons how to do it, versus a surgeon that doesn't even know the procedure exists yet, and it's going to cost you exactly the same thing, why would you want to buy from the person that does not have the education, training, and experience that can give you as close to the desired result, if not the ideal result, as possible?
That absolutely makes sense. Well, this has been an incredible discussion. I almost think we need another podcast just to unpack the difference between term life and what we call, permanent life insurance. So maybe that could be a follow-up to this. Larry, thank you so much for joining us, and we look forward to another great discussion.
No, I appreciate it as usual, Marney. Thank you so much for your time. Have an awesome day, and I will see you soon.
For our audience listening in, we hope you got some great information from here and you have a better understanding of how term life insurance works, should you want to look into that. If you'd like to reach out to Larry with any questions, please email him at lkeller, LKELLER, at physicianfinancialservices.com. Thanks for joining us, and we'll see you on the next episode of the FPA Podcast.
This podcast is intended for general public use and is for informational and educational purposes only. The Foundation for Physician Advancement podcast is not affiliated with or endorsed by Park Avenue Securities, Guardian, or Physician Financial Services, and opinions stated are their own. Lawrence B. Keller is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS. OSJ 777 3rd Avenue, Suite 1703, New York, NY 100172125418800. Securities products and advisory services are offered through PAS, member FINRA SIPC. Financial representative, the Guardian Life Insurance Company of America, Guardian, New York, NY. PAS is a wholly owned subsidiary of Guardian, AR Insurance License number 1057229, CA Insurance License number 0C37340. Physician Financial Services is not an affiliate or subsidiary of PAS or Guardian. 886-0615.1 Expector, April 28th.